Hey everyone, how's it going? Welcome back to another weekly trade recap video. This week is the last week of February. I did take a few more trades and I did incur a few more losses as well. But overall, still positive for the end of February. I did create a journal as well. Welcome to take a look at that in my profile. But let's take a look at the trades and let's see what are my thoughts and management behind them. First trade I closed down, which is pound Kiwi. We went over pound Kiwi from the week before, where I was looking at a potential impulsive move to the downside and was trying to capture that um, the bearish momentum to the downside. And this is my management at the time. When the price pushed to the downside, I first had my stop loss to break even. But when I start seeing a deeper consolidation, a deeper correction in the making, I opt to move my stop loss to about zero point 0.5 profit or so. I didn't want to get tagged out for a break even if anything happens. And in this case, this is as the price started forming this kind of ascending channel. We had this Kiwi news event that came out, I think, just right after the market opens in Asia session. They had a Kiwi news, popped to the upside, pretty much just stopped me off for about zero point 0.5 profit. Looking back at this trade though, even though the trade continued to the downside, continued to my kind of first potential target, I didn't think I was going to be able to hold through that anyways, because when the trade plays down, either if I set my stop loss to break even or add a zero point 0.5 profit, it's gonna get taken out for me anyways before it continue. So doesn't that to me, I don't get too emotional on things like this, because I follow my management approach. We can't just be like, okay, well, this time if you didn't move your stop loss to break even, you would have hit all these profit. Well, hindsight is 2020, right? Because in this case, it works out in that case. But what if another time price reverse and continue upwards? So instead of either taking a break even or a small profit, you take a full loss. That's going to create more emotion and more negative perception on trading. So I'm fine with the management. I'm fine with the result. Actually, I'm fine that I got taken out for 0.5% instead of a break even or even possible at a loss. Even though the trade continued to downside, as we see, this is always my first potential take profit area. I mentioned that in my take profit video. First one should be the beginning of this ascending channel correction, and the second or longer term target is to the lows of the overall price action. So you can see price just did not or could not break out of this channel, could not break continuation. It was trying to form a correction here to break out, but instead it becomes a reversal correction, and we're just seeing the price reverse up. So if we didn't move the stop loss, if we didn't adjust anything, that would be end up taking the same kind of result anyways. So I'm fine with this approach. I'm fine with this management, and that's what I've been doing consistently like this. So 0.5% profit on pound Kiwi. Let's look at the second trade I took, pound dollar. So pound dollar itself, I was looking at this for potential sell opportunities, and when the price is at the very top, we had this kind of a ascending channel. Within the ascending channel, I was looking for a bearish push out from the price. We did end up getting that bearish push up offer. However, I did not be able to catch up. I actually took a loss here, a full 1% loss. So at the time when price was forming this structure here, ascending channel, I like how we had a push down from the price. We had a lower time frame continuation. I opt in with the entry order. Very simple. I just put the stop loss above the high, and it kind of pretty much consolidated for a long period of time. Was trying to drop down there, and then again, eventually popped to the upside, taking me out. Um, when I look back at this trade, I was fine with the management. I was fine with the stop loss. And this is why having a stop loss is so important, guys. Even though I have a strong bearish kind of bias to the downside, I'm not just going to hold a trade without stop loss. Imagine I don't have a stop loss and price pop to the upside like this. I'm going to take a 2 or 3 or 3.5% profit loss, and then price reverse back down. That's going to create even more emotional drama for us. So understand that we can never capture all the trades, right? All we can do is make sure our risk management is set correctly and we enter the trade accordingly. If this doesn't work out, that's fine. I'm still kind of monitoring the price, monitor the trade, and eventually it pretty much give us that bearish breakdown, bearish continuation, and then pushing the price out of this ascending channel. We're reaching to the lows of this structure now, so that's the first usual take profit. But looking at the higher time frame here, we're just about halfway through this potential long-term kind of ascending channel, and if we can break out followed by correction, certainly we see more downside potential. So next week I'll definitely keep an eye on this. I think this is a clear ascending channel, clear bearish move, if we get a continuation here, I definitely see price continue to the low side and possibly moving forward to the downside. So I'm fine that taking a loss here with the intention of getting back into a trade if the price developed into my favor. So that's the second trade I took. Managed to get in on this entry order here, but price did not continue to the downside or did not break out of this ascending channel, and then took a full 1% loss here. Third trend I want to talk about is S&P 500. So S&P 500, we've been talking about most of the U.S. indices are going to have a bearish reversal out of these kind of ascending channel on a higher time frame. So at the time when I was looking at this trade, we had this kind of head and shoulder pattern. We had this right shoulder, kind of a continuation correction for this move down. So an impulse, correction, impulse. So I was looking for opportunity to get into the trade. So you can see that price pushes the downside and then kind of pull back, form a kind of ascending channel. So to me, that was a continuation correction for this move. So I set an entry order here, put the stop loss above the highs, and you can see it stays during the Asia session. It was just correcting in that part in this time frame, and then when London session comes, we do have that bearish drop to the downside. And once I see the bearish drop to the downside, when I break the previous low, I right away set my stop loss to break even. And if we look closely here, price began to push down once and then quickly pulls back and then kind of forming a reversal head and shoulder pattern on the lower time frame. You can see that this is a left shoulder, head, right shoulder also have kind of a flag formation. And I didn't want to get tagged out for break even. It's kind of the same approach as pound Kiwi. When I see these kind of price action, it's very likely that we're just going to get a reversal now, which is what the lower time frame is telling us. So I opted just to manually exit the trade for about 0.5% or so. Pretty much end up happening as price pushes back up. Would have hit my stop loss and break even anyways. So I'm fine with this kind of approach. When I see lower time frame trend change, when I see lower time frame is no longer giving us bearish opportunity or bearish price action, I opt to manage it this way. But however, if we zoom out here, price pretty much just if we look at this, price made a push down and then we pull back, form a deeper ascending channel, and then we're pushing down again. So really, if we zoom out here, we're still having this bearish kind of price action. We're still getting a bearish kind of movement from the market. We're seeing the price dropping down and down now, right? So if we're looking for a correction here, or if we break out followed by another correction, I think they are still valid in my eye. And if we notice, the other US indices are also having a bearish kind of price action. So certainly you can expect this to continue forward to the downside and look for potential selling opportunity once again. So third trade on S&P 500 end up taking a 0.33% loss, 0.33% profit. Sorry, I didn't take a 0.5. My mistake by accident. It's 0.33% that I exit for profit here. Moving on to gold. Gold is a trade I actually took 2 losses on for the week. So let's take a look into this. My approach on the higher time frame. Again, I've been talking about this in the streams. I've been still seeing the longer term approach, which is the bullish opportunity for the market. So on the lower time frame, when I was looking for potential entries, when I was looking for the price, what gives me that confirmation was price kind of pushed down, hitting this double bottom area, right? This was the previous low. Price hit the previous low and then had pretty much a lower time frame bearish, bullish opportunity here, right? You can see that this is an inverse head and shoulder. We push the price up. So pretty much, I like that double bottom on the time frame. We had a descending channel pushing the price down, and then we have a bullish opportunity pushing up. So this could be that first beginning sign of that bullish reversal from the price, and I didn't want to miss the potential bullish opportunity. Hence, I was looking for a potential entry here, and I actually got in 2 of these entries. Both took a loss here. So let's take a look here what my thought process is at the time. So we had that inverse head and shoulder. We pushed the price up, and then I saw the first potential flag correction and opted with the entry order as I usually do, and just set the stop loss below the previous low. Price pretty much tagged me in, and then didn't really do too much, and then was gonna form another flag looking like, but it just had a strong bearish push down, pushing me out. So I got tagged out for that trade here. And when I was looking at the structure, it looked like it was evolving into a larger flag and then a bigger, more in-depth. Now we have a few more swing highs and a few more swing lows, and that to me was Also a potential completion of a flag structure. So I opt in again with another entry order here when price pushed up, had a lower time frame correction within this potential flag correction. So again, enter at the breakout of that lower time frame flag and then stop my stop loss below the lows. And once again, price just kind of consolidated, correcting, and just moved down very slowly, and then eventually take me out. I do want to point out though that I do when I look back at these trades, when I look back on my journal, I did felt like the second trade I could have waited a little bit longer, a little bit more in-depth development in here. It could be potentially breakout from the structure here and continue. Although I had enough confluence from my point of view, I had enough confluence from both the higher time frame bullish outlook from the higher time frame, and then lower time frame had the descending channel, double bottom, and then price had a lower time frame impulse. I had all these good confluence on my side, but I thought that I could have waited a little bit longer just to wait for that second trade to give you that last confirmation of breakout followed by continuation. So that's something I learned or something I could work on in the near future if I was to look to enter a second trade after I just take a full loss on the first trade. So that's trade on gold. Took two trades and both of them for a full 1% loss. Moving on to Aussie CAD. So Aussie CAD was a trade I also was looking for a potential continuation on a higher time frame. If we look at what the higher time frame was doing at the time, we broke the higher time frame top. We broke it with a clear kind of a flag channel. We break to the top side. And if we look at the lower time frame at the time, it was forming another flag structure potentially pushing up. And that's when I opt in with the entry order here. I thought at the time we did break that higher time frame previous top. We broke it impulsively, and then we had a clear kind of a flag correction, so an impulse correction, looking for the next impulse to break to the upside. So I opt in with the entry order. Price pretty much tagged me in here. Again, just kind of stay most of the time in the negative, and then eventually take me out after breaking the lows. Looking back at this, I felt like the breakup above the previous high was clear. We had this kind of a flag structure breaking up, and there was bullish momentum in there. However, I think one thing I could have taken into consideration is that we have been in a bullish move for quite some time now. There isn't a bigger kind of a higher time frame continuation, which we should expect to see after a strong move up like that. And even though these lower time frame correction is still valid in my opinion, but I think there's an argument to be made that after such a big move to the upside, these lower time frame may or may not be as profitable as to look for a higher time frame continuation after breaking the previous high. So looking back at this, like I mentioned, I think I could work on being a little bit more patient here. I think the trade, when I look back at it, was valid, was legit, was a clear entry for a breakout continuation. Just didn't work out this time, and potential area that I can work on is waiting for a bigger consolidation, a bigger correction such as this, to be able to push the price higher. So that is Aussie CAD. Took a full 1% loss here, and again, now that we're getting into a bearish kind of price action, now that it's clear that we no longer have that bullish continuation anymore. We fall into this kind of a rising wedge, and we had a clear, sharp bearish impulse, right? So naturally, I will be looking for continuation correction to potentially reverse the price and continue go lower. So one more trade to go over, dollar Swiss. So dollar Swiss is a trade I also entered for a 0.5% loss. At the time when I was looking at this trade, I like how we had a impulsive phrase. We had a continuation correction, ascending channel. So a larger ascending channel and a smaller ascending channel within usually give us good confluence for a potential sell. If we look at the latest price, we had this kind of an impulsive phrase pushing down, correction, impulse, correction. So when I see this larger correction, when I see price was about to break out of it, again, setting the entry order just below and then setting the stop loss above. I like the higher time frame. I like the lower time frame price action, potentially forming this ascending channel, pushing the price down, and the risk reward is there. However, when I was monitoring the trade, usually after I see an impulsive move breaking below the low, I would usually set it to break even. But I realized there was a little bit too tight to set it to a break even, so I opt in just to do a 0.5% kind of a stop loss after the trade has moved down impulsively, which is what I always look for. But if we look closely here again, it was trying to form a lower time frame, like a smaller continuation correction, but instead we push down correction. Instead of pushing down lower, you just have a surge of bullish push to the upside and pretty much just take me out for 0.5% a loss here. Again, I don't think too much about this. I think I my management was fine after I see an impulsive move breaking down. I always want to set the trade to break even once a trade below the previous low, but just in this case, I couldn't. There's not enough room, and I opted with the zero point 0.5 instead. But looking back at this, if we look closely here, eventually price just formed a deeper consolidation and forms an inverse head and shoulder, would have taken me off for a 4% loss anyways. And structurally, I still think it's valid. I still think something can happen here, but because of this lower time frame push up, not really no longer interesting. It looks like it's going to form into a bullish kind of price action now. So I still want to keep an eye on this. Usually, when I take a loss on the trade, I don't kind of turn my head away. I still want to see what will happen in terms of development. If this is going to still continue climbing up and still looking bearish to go down, or we're just going to fall on going to a bullish trend now. So Dollar Swiss took a 0.5% loss on this trade. Last one I want to go over is Bitcoin because I did close down all my Bitcoin trade. I had two trades going on. First trade was a scale-in position from here. Price initially pushed to the upside and then just pretty much had a sharp move down followed by a continuation and then pushed down lower. So I got pegged out for a break even here. Uh, but the longer trade that I was holding, the longer trade I got in all the way from the bottom here, ended up exiting for about 12.39% or so. So long-term investment hold, long-term trade. Didn't include that in my journal, but let's take a look why I exited. My approach at the time was when I see a sharp impulse like this down, just like something like this, it was different now because when I entered here, I knew that we wanted to hold through a longer term, higher time frame correction. Whereas when price has pushed up this much already, breaking the previous high, I always said in my plan in terms of management, if I see a sharp move down and if I see continuation correction, if I see clear lower time frame continuation correction, I did not want to hold through a trade anymore. I want to take profit here because we could just start going into a bearish trend from that. And I didn't want to hold through that. So when I was looking at the lower time frame correction there, I see that price began to form this lower time frame correction. It had an impulse correction looking like it's going to break below. There's also a mini lower time frame ascending channel looking like it could break below. So I just opted to exit the trade here. I thought that this can be continued to the downside, and I didn't want to miss out the profit on the overall long-term hold on this one. Of course, I would still look to get back into Bitcoin, in the near future when I see potential deeper consolidation complete and looking for upside. But for now, it's really hard to determine what the price is doing. We had a clear impulse down. Potentially was looking at this as a continuation correction. We're pushing down lower. So if that forms more continuation, it looks like it could be in this case, looks like a head and shoulder. It looks like a continuation correction. So this might just start dropping more and more and more. And that's why I opt into exit because I did not want to see this drop down all the way down again and potentially missing out the profit I've earned. So there it is, guys. I did have quite a bit more trade this last week. I did take most of these losses, but overall for the month, I'm still positive. And Bitcoin, this long-term hold investment, I did earn about 12% or so. So any questions, comments, or feedback, please let me know below. And I will chat with everyone next time in my weekly Outlook stream. Thank you very much, guys.